Hello students. In present video, I am going to explain about ninth problem from Bills of Exchange topic. I am taking this question from Financial Accounting to BCom first year semester 2 Pankaj publications book. Let us see the question first. Ninth problem. On 1st July, A sells goods to B for 10,000 rupees and drew 3 bills on him. The first for 2,000 rupees for 1 month, the second for 3,000 rupees for 2 months, and the third for 5,000 rupees for 3 months. B accepts and returns these bills to A. The first bill is retained by A till the date of maturity. The second bill is endorsed by A to his creditor C on 3rd July. And third bill is sent to bank for collection on 4th July. On maturity, all bills were dishonored and noting charges paid were 10 rupees, 15 rupees and 20 rupees respectively. Give journal entries in the books of A, B and C. This is the question. Let us see the solution for this. Let us understand the question first. See, A is selling goods to B on 1st July. Sales value 10,000 rupees. A is selling goods to B on credit. And from B, A wants a return proof for this 10,000 rupees. So A prepared 3 bills on B. First bill value 2,000 rupees. Second bill value 3,000. Third bill value 5,000. First bill is prepared for a period of 1 month. Second bill is for 2 months. Third bill is for 4 months. So 3 bills are prepared on 1st July on sales date. A presented these 3 bills to B and A received acceptance from B. So for these 3 bills, A is known as drawer and B is known as drawee. So after receiving the acceptance, A can treat with the bill in 4 ways. He may retain the bill with him till the due date. He may discount the bill with the bank. He may endorse the bill to his creditor. He may send the bill to bank for collection. So for first bill, the treatment is till the due date of the bill, A retained the bill with him. So what is the due date of this bill? From 1st July 1 month if you count. 1st July to 1st August 1 month. So to this first date, 3 extra days we have to add. These 3 days are known as grace days. So from second you have to count 2nd, 3rd, 4th. Due date of the bill is 4th August. On that day, A went to B, but B failed to pay the money. That is known as dishonor of the bill. And noting charges are paid by A, amount 10 rupees. So noting charges means what? So to have a proof for this dishonor, the holder of the bill gets the bill noted and protested. That is known as noting. So to public notary, he has to pay some charges known as noting charges. So noting charges are always paid by the holder of the bill. Holder means on the due date, a person who is possessing the bill is known as holder of the bill. So bill is retained with the drawer, no? Therefore, on the due date, drawer only will be the holder of the bill. So A paid this noting charges 10 rupees. Come to second bill, 3,000 worth bill. After receiving the acceptance, on 3rd July, A endorsed this bill to his creditor C. On the due date of the bill is with whom? C. So C went to B, but B failed to pay the money. So second bill is also dishonored. And who is the holder now? On the due date, bill is with C. C is the holder of the bill. So C paid noting charges 15 rupees. Come to third bill, 5,000 worth bill. Bill is prepared for 4 months period now. And after receiving the acceptance on 4th July, A sent this bill to bank for collection purpose. That is known as sending the bill to bank for collection purpose. Now, bank acts as a mediator between A and B. So, in favor of A, from B, bank collects that money. And that is not banker's money. So, that is A's money only. Therefore, in A's bank account, bank has to deposit that money. But on the due date, what happened? Due date of this third bill is from 1st July 4 months if you count, due date will be 4th October. On that day, bank went to B. B dishonored the bill. So bank pays noting charges, but from our account only bank pays the noting charges. Because bank is only a mediator between A and B, no? So from A's account, bank paid 20 rupees noting charges. So there are 3 bills. On the due dates, these 3 bills were disordered. And for 3 bills, he is giving noting charges. And finally, what is asking us to prepare? Journals in the books of A, B and C. So first, journal of A. In brackets mentioned that A is a drawer. In question, he is starting with a sales sentence. Means for sales also we have to write the journal entry now. So we are preparing journal of A now. Therefore, analyze all the transactions from A's point of view. Our assumption is we are an accountant of A. First, what happened? A is selling goods to B on credit for 10,000 rupees. So to write the journal entries, we have to follow some steps now. So first step is identify the accounts involved in this transaction. So we are A. We are giving goods to B. So from A, goods are going to B. There are 2 accounts in this transaction. B account, because to B only we are giving goods. Goods account, because goods are going from us. Next step, grouping. Accounts are of 3 types now. Personal accounts, real accounts, nominal accounts. So these 2 accounts come under which category we should identify. B account. With a person name, if you open any account, that is a personal account. B account is a personal account. Goods account. Goods means asset. With asset name, if you open any account, that is a real account. Goods account is a real account. Last step, apply the double entry principles. For personal account, double entry principle is debit the receiver, credit the giver. So we are A, we are giving goods to B. Means B is receiving goods, B is a receiver. Debit the receiver is applicable. We have to debit B account. Real account rule, debit what comes in, credit what goes out. So from A, goods are going, credit what goes out is applicable. We have to credit goods account. But goods word directly we should not write. Instead of that, transaction name we should write. This is sales transaction, no? Right? Sales account. Then final entry is B account debtor to sales account. Date on 1st July goods are sold now. Entry is B account debtor to sales account. Amount is 10,000 rupees. Then what is the effect of this entry on balance sheet of A? Now B is becoming a debtor because B has to pay the money to us. So debtor is an asset. Asset shows a debit balance. Creditor is a liability. Liability shows a credit balance. While writing the journal entries, remember these 2 important points. Now B is a debtor. Debtor is an asset now. Asset side, debtor. Amount 10,000 rupees. Journal of A, drawer. Date, particulars, LF number, debit, credit. First entry is on 1st July. B account debtor to sales account 10,000 rupees. Narration, being goods are sold on credit. Next, what happened? A prepared 3 bills on B and received acceptance. Here, debtor asset is converted into another asset known as bills receivable. So, in balance sheet, debtor asset we have to cancel. In that place, a new asset bills receivable we have to create with 10,000 rupees. How to cancel debtor account? In first entry, sales entry, by debiting B account, we have created a debtor account. If you want to cancel, you have to credit to B account. We have created this debtor account with 10,000. No? So cancel with the same amount, 10,000. Which account we should debit? A new asset known as bills receivable we want to create. So asset shows a debit balance now. If you want to create any asset, you have to debit. Therefore, bills receivable account we have to debit. Bills receivable account debtor amount 10,000 rupees. Date, acceptance received date is same no, 1st July. See, actually 3 bills are there. But 3 times you need not to write bills receivable word. Or 3 entries you need not to write. Because on all these 3 bills on the same day, 1st July only we received acceptance. Therefore, while writing the entry, only 1 time we write bills receivable word and the 3 bills total 10,000 we debit. In narration, clearly we have to mention about these 3 bills. Date 1st July, bills receivable account debtor to B account 10,000 rupees. Narration, being acceptance is received on 3 bills worth 2,000 rupees, 3,000 rupees and 5,000 rupees for 1 month, 2 months and 3 months. Next is for what? Don't think that first we will complete all first bill related entries, then second bill, finally third bill. We have to write the journal entries on date wise. So next what happens, see, after 1st July, on 3rd July, A endorsed second bill to C. No? For this endorsement, we have to write the third entry now. So to understand this endorsement entry, first we should see why A is giving this bill to C. Because once from C, A purchased goods on credit for 3000 rupees. So in full settlement, A is giving this 3000 worth bill to C. So for purchases, first we'll think the journal entry. Transaction is purchased goods from C, 3000. Entry is purchases account debtor to C account. Amount 3000 rupees. Why purchase account is debited? Because to A from C goods are coming. So goods account is a real account. Real account rule, debit what comes in, credit what goes out. Goods are coming now. Instead of debiting goods word, we wrote purchases account. Why C account is created? Because C is giving goods to us. C account is a personal account. Personal account rule, debit the receiver, credit the giver. C is giving goods now. C is a giver. Therefore, C account is created. And what is the effect of this entry on A's balance sheet? A personal account, if you credit, then the meaning is that person is a creditor. Creditor is a liability. So liability side, creditors, 3000 will be there. Now come to endorsement entry. In full settlement, A is giving this second bill to C. After giving this bill with A, now bill is not there. Means bills receivable we have to cancel. How we created bills receivable? By debiting. How to cancel? By crediting. To bills receivable account. Second bill, 3000 we have to cancel. Which account we should debit? Creditor is now cancelled because we are giving bill to him. We are clearing his loan. We have to cancel creditor account. How we have created creditor account? By crediting. How to cancel? By debiting. Debit C account with 3000 rupees. This is the entry for endorsing the bill to C. Date, endorsement date, 3rd July. What is the effect on balance sheet? Liability side, creditor will get cancelled. Asset side, in 10,000 bill, 3,000 we are cancelling. Then the remaining bill value is 7,000 rupees. 3rd July, C account debtor to bills receivable account 3000. Narration, being second bill is endorsed. Next entry is for, think about the dates again. After 3rd July, on 4th July, A sent a bill to bank for collection. For that, we have to write the next entry. So we are A, we are giving bill to bank for collection purpose. Actually, we should remember the due date. On the due date, we should go to B. We should collect this 5,000 rupees. But as we are busy, we are giving this collection responsibility to our banker. So what is the benefit to bank? Bank takes some charges from us. So we are giving bill to bank for collection purpose. When we give the bill to bank, with us, that bill is not there. So 5,000 worth the bill we have to cancel now. So how we have created this bill? By debiting. How to cancel? By crediting. To bills receivable account. 5,000 we have to cancel. Third bill value. Which account we should debit? Don't think that we are giving bill to bank. So bank is a receiver. As per personal account rule, debit the receiver is applicable. We have to debit bank account. If you debit bank account, it gives a meaning that on 4th July only our bank balance is increased. So when money is deposited in our bank account, then only bank account will be debited. When money comes, not on 4th July, on the due date of this third bill, on 4th October money comes. On 4th October bank balance increases, not on 4th July. Therefore, don't debit bank account. Then which account we should debit? We should remember that our bill is with the bankers. On that, in future, money should come. To remember that, we have to create an account known as bill sent to bank for collection account with the 5,000 rupees. So this is the entry for sending the bill to bank for collection. When? On 4th July. What is the effect on balance sheet? In balance sheet, bills receivable. In 7,000, 5,000 we have cancelled. Now remaining value 2,000 appears on asset side. 4th July, bill sent to bank for collection account debtor to bills receivable account 5,000. Narration, being third bill is sent to bank for collection. Next what happened? First bill due date 4th August. Bill is dishonored. Now for that dishonor we have to write the journal entry. See, we retained the bill with us. On the due date, A went to B. B dishonored the bill. Means on that particular bill, in future, money is not going to come. So this bill is not an asset with us. This bills receivable 2,000 we have to cancel because money is not going to come. How we have created this? By debiting 2,000 rupees. How to cancel? By crediting. We have to credit bills receivable account to bills receivable account. Amount 2,000 rupees in credit column. Next, we retain the bill with us. Means we are only the holder of the bill. So we need a written proof for this dishonor. So we went to public notary. So we have done noting and protesting. To public notary, we paid 10 rupees noting charges. So from A only, this 10 rupees is going now. So cash is a real account. Real account rule, debit what comes in, credit what goes out. Now 10 rupee cash is going from A. We should credit cash account with 10 rupees. To cash account, 10 rupees. On the due date, we are paying this 10 rupee noting charges. But in future, we demand that money from B only now. So now finally, how much money B has to pay to us? Bill amount 2,000 rupee plus noting charges amount 10 rupees. For 2,010 rupee, again B is becoming a debtor. So debtor is an asset. We have to debit asset account. Therefore, B account we have to debit with the 2,010 rupees. Date, first bill due date, 4th August. What is the effect on balance sheet? Again a debtor asset is created now with 2,010 rupees. 4th August, B account debtor 2,010 rupees, to bills receivable account 2,000, to cash account 10 rupees. Narration, being first bill is dishonored and noting charges paid. Next entry is for what? C. Next what happened? Second bill due date on 4th September. Now C is the holder of the bill. C went to B. B dishonored the bill. Now C needs a written proof for this dishonor. So he went to public notary. He paid noting charges. Now C comes to A and he demands that money from A only now, because we have only given this bill to C. If B pays the money, we are not responsible. If B fails to pay the money, then C demands that money from A only. Now in A's books we are writing journal entries now. So think from A's point of view. To C, A has to pay the amount. How much? Bill amount 3,000 plus noting charges amount 15 rupees. So to A, C is a creditor for 3,015 rupees. So creditor is a liability. Liability shows a credit balance. Means we have to credit in journal entry to C account. C is a creditor for 3,015 rupees. And A demands this 3,015 rupee from B only now. So to this 3,015, B is becoming a debtor. Debtor is an asset. We have to debit that asset account. Therefore, B account we have to debit. Amount same, 3,015 rupees. So for 3,015 rupee, B is a debtor, C is a creditor. From B we have to take that money. To C we have to pay that money. Date, second bill due date, 4th September. Then what is the effect on balance sheet? Now B is becoming a debtor for 3015 rupees. Already B is a debtor for 2010. Now extra amount 3015. Total becomes 5025 rupees. Next, C is a creditor, no? Liability side, creditor for 3015 rupees. 4th September, B account debtor to C account 3015 rupees. Being second bill is dishonored and noting charges paid. Next entry is for third bill on the due date. Third bill is dishonored, no? For that. See, 4th October. Third bill, 5000 worth bill is with the bankers. Bank went to B. B dishonored the bill. Bank informs that to A. In A's books, now we have to cancel this bill sent to bank for collection account. So here in this entry, we wrote that there is one bill with the bank. On that bill, in future, we are going to receive money. Now this bill is dishonored, means this account we have to cancel. By debiting, we have created this account. To cancel, we have to credit. To bill sent to bank for collection account. Amount 5000 rupees. Bank pays noting charges 20 rupees, but not from their own pocket. From A's account only they pay. Means A's bank balance is reduced by 20 rupees. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. So bank is paying 20 rupees from our account. So bank is a giver. In other words, bank balance is reducing with 20 rupees. We have to credit bank account. To bank account. Noting charges amount 20 rupees. Now again A demands this 5020 rupee from B only, no? B has to pay. So to A, B is becoming a debtor. Debtor is an asset, we have to debit. B account we have to debit. For how much value? 5020 rupees. Now B is a debtor. What is the effect of this entry on balance sheet? Now debtor amount increases by 5020. Then total becomes 10,045 rupees. In this, 3 bills amount 10,000, 3 noting charges total 10 rupee plus 15 rupee plus 20 rupee 45 rupee. So for 10,045 rupee, now B is a debtor. 4th October, B account debtor 5020 rupees. 2 bills sent to bank for collection account 5000. To bank account 20 rupees. Being third bill is dishonored and noting charges paid. A's journal is completed. Now come to B's journal. In brackets mentioned that he is a drawee. So think all the transactions from B's point of view now. Because we are writing journal entries in B's books, our assumption is we are an accountant of B. First what happened? B purchased goods from A on credit. For that we should write the first entry. So 2 accounts we should identify now. Goods are coming to B, therefore goods account is one account. From whom? From A, therefore A account is one account. Next step is grouping, no? Goods come under real account because it is an asset. A account is a personal account. Finally apply the double entry rules. Real account rule, debit what comes in, credit what goes out. Goods are coming now, debit goods account. Instead of goods, write a transaction name, that is purchases. Personal account rule, debit the receiver, credit the giver. So A is giving goods to us. A is a giver. Credit A account. Final entry is purchases account debtor to A account. Amount 10,000 rupees. Purchase date is 1st July. What is the effect of this entry on B's balance sheet? A account is created. When any personal account is created, then the meaning is that person is a creditor. Creditor is a liability, no? Liability side, creditor, 10,000 appears. Journal of B, drawee. First entry is on 1st July. Purchase account debtor to A account 10,000. Narration, being goods are purchased on credit. Next entry is for giving acceptance. A prepared 3 bills. On 3 bills, B is giving acceptance. For this acceptance, now we have to write the second entry. Date is 1st July. See, A is a creditor. Now same creditor liability is converted into another liability known as bills payable. So in our books, creditor liability we have to cancel. A new liability known as bills payable we have to create. How to cancel creditor liability? In first entry, by crediting A account, we have created a creditor liability. By debiting A account, you have to cancel that creditor liability. So A account we have to debit with the same amount, 10,000 rupees. A new liability known as bills payable is created in our books now. So liability shows a credit balance. To create any liability, we have to credit that liability name. Bills payable account we have to credit. To bills payable account, 10,000 rupees. 3 bills are there no actually. So 3 times you need not to write the journal entry. Because all the 3 bills are accepted on the same day, 1st July. So 1 entry is enough. And in narration clearly we have to mention about this 3 bills information. 1st July, A account debtor to bills payable account 10,000. Being acceptance is given on 3 bills worth 2,000 rupees, 3,000 and 5,000 for 1 month, 2 months and 3 months. Next entry is for what? See, date wise if you observe, after 1st July, on 3rd July, A is endorsing second bill to C. This endorsement is between A and C. Now in B books we are writing journal entries. B is not affected. So for this endorsement in B books there is no entry. Next what happened? On 4th July, A is sending third bill to his bank for collection purpose. So this is also between A and bank. In B books there is no journal entry. Next what happened? First bill due date on 4th August. B dishonored this bill. For that we have to write the journal entry. Next entry is on 4th August. B dishonored the bill. Means first bill, 2,000 bill is not a liability now. So in this bills payable 10,000, that 2,000 we have to cancel. Then remaining bills payable will be 8,000 rupees. How we created the 2,000 bills payable liability? By crediting. How to cancel? By debiting. Bills payable account we have to debit 2,000 rupees. First bill value. Next, A paid 10 rupees noting charges. Now A demands that noting charges from B only, no? So for this noting charges 10 rupee, finally B is responsible. Because B dishonored the bill. That is why A paid noting charges. So in B's books, we have to show these noting charges as an expenditure. So expenditure comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is an expenditure now, we have to debit. Noting charges account debtor. For this 2010 rupee, again, A becomes a creditor now. So A is not going to live like that. On due date, we fail to pay the money, but in future we have to pay now. So for this 2010 rupee, again A is a creditor. So creditor is a liability. Liability shows a credit balance. Means we have to credit A account with a total 2010 rupees. What is the effect on balance sheet? A new liability, creditor, is also created with 2010 rupee. Bills payable liability is reduced by 2000 and the creditor liability is increased by 2010 rupees. 4th August, bills payable account debtor 2000, noting charges account debtor 10 rupees, to A account 2010 rupees. Being first bill is dishonored and noting charges paid. Next entry is for second bill dishonored. On that day, second bill is endorsed to C, no? C came to us and we dishonored the bill. C paid noting charges 15 rupees. So C goes to A and demands for 3,015 rupees. A demands that money from us only, no? So to us, A is becoming a creditor for 3,010 rupees. To A. Now A is a creditor for 3,015 rupees. Date 4th September. Bills payable liability. Again, we have to cancel with 3,000 rupees. No? In this 8,000, Second bill is also dishonored. So second bill we have to cancel now. 3,000 we have to cancel now. How we created? By crediting bills payable. How to cancel? By debiting. Bills payable account data 3,000. Noting charges, again same explanation. Finally noting charges we have to bear. For us it is an expenditure. As per nominal account rule, we have to debit noting charges account. Two entries are same, no? Only the dates and the amounts are not same. What is the effect of this entry on balance sheet? In 8,000, 3,000 is also cancelled. Now finally 5,000 worth bill is there. And creditor is increased by 3,015 rupees, no? 2,010 rupee plus 3,015 rupee. Total 5,025 rupees. 4th September, same entry, bills payable account debtor, noting charges account debtor to A account. Amounts 3,015 rupee, 3,015. Narration is also same. Being second bill is dishonored and noting charges paid. Last one is for third bill dishonor. On this third bill due date, 4th October, again same thing happens. So we have to cancel bills payable liability because bill is dishonored. Now third bill value 5,000. We have to debit noting charges because finally we have to bear noting charges account debtor. For this 5,020 rupees, again A is becoming a creditor. We have to credit A account with the 5,020 rupee. What is the effect on balance sheet? Now bills payable 5,000 is also cancelled. Creditor is increased by 5,020 rupees. Then total creditor amount becomes 10,045 rupees. 10,000, 3 bills total, 45 rupees. 3 noting charges total. 4th October, bills payable account debtor 5,000, noting charges account debtor 20 rupee, to A account 5,020 rupee. Same narration. Being third bill is dishonored and noting charges paid. With this, B's journal is also completed. Finally come to journal of C, endorsee. Now come to journal of C. Mention that he is an endorsee. Second bill is endorsed now. Therefore, second bill related entries only we should pass. So first bill and third bill. C is not concerned with these two bills. Forget about these two bills now. First what happened? Endorsement is coming from A. Question is, why endorsement is coming from A? Because A has to pay 3,000 rupees to C. Why A has to pay? Because once C sold goods to A on credit for 3,000 rupees. So we are in C's books now. Therefore, think from C's point of view. Transaction is goods are sold to A on credit. Entry is A's account debtor to sales account. Amount, second bill amount, 3,000 rupees. A account is debited because C is giving goods to A. A is a receiver. So personal account rule, debit the receiver, credit the giver is applicable. Sales account is credited because from C goods are going. So goods account is a real account rule, debit what comes in, credit what goes out. Goods are going now, therefore we have to credit goods account. Instead of goods word, sales account we wrote. As per this entry, A account, a personal account is debited. When any personal account is debited, then the meaning is that person is a debtor, it is an asset. Asset side, debtors, 3,000 is appearing. Now come to endorsement entry. When on 3rd July bill is endorsed now, for receiving endorsement we have to write the entry now. So a bill is coming from A in full settlement of that 3,000 rupees. So for A, for drawer, a bill is bills receivable because in future he is going to receive the money, asset. For B, for drawee, a bill is always bills payable because he has to pay the money on that. It is a liability to drawee. For endorsee also, a bill is always bills receivable because on that bill in future money will come now. So for drawer, endorsee, we have to write bills receivable words. For drawee, we have to write bills payable word. Bill is coming from A. So a new asset known as bills receivable is created now. Bills receivable asset is created with 3000 rupees, and A only is giving that bill, means debtor only is converted into bills receivable. So debtor account will get cancelled now. Two things you have to do now. Bills receivable asset we have to create, debtor asset account we should cancel. How we have created debtor asset account? By debiting A account. How to cancel? By crediting to A account. How to create a bills receivable asset account? Asset shows a debit balance now. If you want to create any asset account, you have to debit that. Bills receivable account we have to debit. This is the final entry. Bills receivable account add to A account. Amount 3000 rupees. Journal of C. Endorse. 3rd July. Bills receivable account debit to A account 3000. Being endorsement is received. Next entry is for dishonor. Date, second bill due date, 4th September. On that day, C went to B. B dishonored the bill. C paid noting charges 15 rupees. From C, cash is going. Therefore, cash account we have to credit to cash account 15 rupees. And this bill we have to cancel now because money is not coming. By debiting we have created, to cancel we have to credit to bills receivable account. Bill value 3000 rupees. Then what C does? Again he goes to A and he demands for 3015 rupees. So to see, now A is becoming a debtor for 3015 rupees. Debtor we have to debit now. A account we have to debit with 3015 rupees. Now what is the effect on balance sheet? Bills receivable asset will get cancelled because money is not going to come on that. A new asset, debtor account, will be created with 3015 rupees. 4th September, A account debtor 3015 rupees, to bills receivable account 3000, to cash account 15 rupees. Being bill is dishonored and noting charges paid. With this, C's journal is also completed. Take a screenshot of journal. Next page. So this is the end of present video. Hope this video is helpful to you. Thank you.